Hi and welcome to your monthly warning video from me. This is all things finance and economics, things that I am concerned about right now, I'm seeing going on. So I bring these videos to you every month. So in this month's episode, we're going to be talking about the banking sector, of course, no surprise, finances, lockdowns, business collapses, job losses, stimulus, inflation, deflation, stagflation, and one that you may never have heard anyone talk about before, which is slumpflation. And of course, we can't talk about all these things without talking about rising asset prices. So I'm going to explain what's going on there and also some of the things that are going to occur as far out as 2022. These things aren't being talked about yet, but they are inevitable to occur. And the first warning that I really want to give you all to get you started is I'm seeing a lot of people who are still sat on the sidelines. They watch my channel, they watch some of these other fantastic finance YouTube channels where all of us are giving the same warnings at the moment about a number of things that are going to be happening very shortly or come into pass in the next year, over the next 12 months. And I'm still seeing a lot of people just sat on the sidelines, just hoping and praying that this isn't going to happen, some of these things aren't going to happen, that we aren't going to go into an even deeper recession or depression like we had back in the Great Depression. I would say that now is the time not to sit on the sidelines anymore and to start keeping a journal, or just even if you have a pen and a notepad, and start writing some of these things down, because you'll start to see the patterns that are emerging, all the things that even the government, mainstream media said will not happen. There's no way these things will happen. And they've happened. Look at the things that have been going on just over the last 2 weeks, things that people would never have expected to occur are now occurring. So I would say now is not the time to be passive anymore. Now is the time for you to actually take control of your financial and economic future and your family's future, more importantly, especially if you have children or you're caring for elderly relatives. You really need to start preparing now for a number of these things that are going on. And just a reminder, if you haven't joined our private community, I would highly encourage you to do that. You can join for just as little as $1 per week to be part of a financial community with people just like yourself. If you enjoy this channel, believe me, you'll be in good company there. We have all sorts of threads, all sorts of topics, trainings and things like that. Videos, posts, I post in there every day. Video content now, it's not just on YouTube. I'm now producing video content for the private community as well. The link's in the description just below this video if you want to come over and check it out. We talk about everything from general finance, investing, stocks, bonds, mining commodities, precious metals, heavily on silver. We also talk about gold. We talk about all sorts of things, controversial topics where we can't talk about on YouTube. And the list really just does go on and on and on. This last couple of months, it's been very popular with second residencies. We've been talking about that and different passports, how if you want to escape your country. But this month, our focus is on cryptocurrency. As you know, I did a U-turn a couple of months back on cryptocurrency. I made a big video on that and talked about why I did a U-turn. I'm very, very glad that I did do that, because some of the cryptos that I bought are up over 100% now. So that's Bitcoin, Ethereum example. But I've actually just bought a whole basket of 20 altcoins, which was extremely complicated because you can't buy these coins on a lot of the platforms. So if you're interested in crypto, this month we're going to be focusing on crypto education. It will be aimed at beginners to intermediates. When I say intermediates, it will teach you how to get altcoins, which are alternative coins that you won't normally be able to get. So if you're interested in that, that's the end of the presentation of this here. Just check below the description. And with all that said, let's get into the content. So I just saw this article yesterday from the Times. This is the UK, and it said 4,000 finance firms could collapse, and that comes from the Financial Conduct Authority. This is extremely worrying. This is just the UK. Remember, the UK is somewhat of a monopoly on financial firms, so there aren't as many as there are in some other countries where the competition isn't as fierce. We do have a big monopoly in the UK. Look at the example of mortgages. You can't get more than, say, a 5-year fixed rate mortgage, but you go to the USA, you can get a 30-year fixed rate mortgage. There's a lot of issues with the UK financial market services, and yet they're supposed to be one of the strongest in the world. And yet this article comes out saying we could see 4,000 finance firms collapse. And this is very worrying because it's not just the finance firms. I'm seeing patterns right now with the banks. You'll probably notice this. Don't just take my word for anything I say, by the way. Go and check this and verify it for yourself. I'm merely a reporter, I guess you can say, a bit like a journalist, if you want to say it like that, combined with my finance and economic knowledge. I look long-term. We call this macro. That's what I focus on. So definitely check these things out. So one pattern I've been noticing lately was, and this was very strange, I've never been to an ATM before where I couldn't withdraw cash. But about 2 weeks ago, 2.5 weeks ago, I went around and the first ATM had no cash in it. And I thought that was really bizarre, but didn't think too much of it. I then went to a second ATM and that had no cash in it either. Now, one time I think is a coincidence, but 2 times that is quite unusual. Then I noticed in our private community, a lot of people were saying they've been going to the banks, not just in the UK, this is USA, Canada, Australia, Germany, France. We have people from all over the world. People are saying they've been trying to cash checks or withdraw large amounts of money. And again, we're not talking huge amounts. Sometimes it's as low as 3,000 or 4,000. And the banks have said that they have to come back in 5 or 6 days. They have to book an appointment to get this cash. This again is giving me some sort of red flags, warning signals at the moment. We're also seeing a number of banks for no reason that are saying they're closed on certain days for admin days. If you've watched my Great Depression series, you'll see there's a pattern here. There's a correlation to what was happening during the 1930s Great Depression. So I personally, again, this is my warning to all of you, I don't keep cash in the bank. And I'll tell you a perfect example that happened to me this week. My bank account, and this is my main account, got frozen. And it took so much work to get it unfrozen because it was, again, I'm innocent of this, but it was called AML, anti-money laundering. So there was this, there was a red flag because I have different income streams. As you know, I'm an entrepreneur. So they look at it as if, well, if you're, just a normal person, you should have a salary coming in every month from a company, or if you're self-employed, you should have income. Whereas my income doesn't work like that. I have so many income streams, from investments to my different businesses that I have, to self-employed income as well. I do mentoring. I have, there's so much that I do that generates all these different income streams. So what happened, what triggered this was I wanted to buy cryptocurrency. And you'll notice a lot of these triggers at the moment where accounts are getting frozen are from cryptocurrency. And again, don't take my word for it. Try it yourself or ask anyone who's been buying crypto recently. And what you'll notice is the banks are stopping the withdrawals or the transfers, and then they're putting freezes on your account in some cases. So I had to go through a 40-minute interview with this person who asked me all these questions. At the end, I didn't pass the interview in that they felt that it was just too suspicious when I told them I have a YouTube channel, I have Patreon, I have all these investments, I have all these income streams. They just said it was just too unusual and they froze my account. Now the problem was I have loads of different bank accounts, but my income goes into one bank account before it gets split up. So of course my income goes in and it gets frozen. And this is very easy for the banks to do. Even though it's your money, it's you've earned that money, they can easily freeze it. And there's not a lot you can do about it. So I'm shocked that this has occurred and has happened to me. I don't know what else to say on it. But I am going to get it unfrozen. It'll all be unfrozen next week or so. And I've now rediverted where my payments go to so that I don't have this issue in the future. If you're enjoying this video so far, would you do me a quick favor and just click the like button below? Just helps the video to get ranked. Thank you so much. And why not subscribe to the channel while you're here? But I do have a sneaky suspicion that a lot of the banks don't want you to be withdrawing or transferring your fiat money into cryptocurrency, because we're seeing this mass exodus from fiat into cryptocurrency. So I do have a suspicion that that is part of what's going on here. And again, this interview was ridiculous. They were trying to tell me, crypto's a scam. And this was the thing that made me laugh. We advise you We advise you. That is very risky for them to say that, because I could quite easily say, oh, I could have bought these cryptos and I didn't because you advised me, you gave me financial advice not to buy these cryptos. So I think they're treading on thin ice with all of this. But the main warning I want to give you with the bank is that nothing has changed. They are still heavily over geared. They are massively over leveraged. All this money that you've deposited with them over the years, especially if you're a saver, there's something called fractional reserve banking, and there used to be a lower limit of 10%. In fact, that limit has now been removed. So a lot of people still aren't aware of this, but the lower limit has been removed. So there is no limit now. So banks can just loan out money. So before, let me give you an example. If you put 1,000 in the banks, £1,000, dollars, euros, whatever, the bank can loan out 90% of that. So they can take that £900 or dollars or whatever you want to say, and they can loan it to someone else. This is where it gets crazy. That next person takes that 900 and they might, do something with it. And then the bank can then loan out 90% of that, which is, 810. And it just keeps going around and round and round and round and round. So this is, increasing the velocity of money, as it were, which is what's good for them. But what this is doing is creating all these massive debts, mortgages, banks, bank loans. These are the debts that the banks have at the moment, at a time when everything is exploding, sort of asset prices, not values, asset prices. And it is very, very overburdened with this debt. And I personally think this was a huge mistake that the government and the banks and the whole sector allowed, because what they did was they allowed all these big companies that are on the stock market to actually borrow lots of money, lots of finance from these banks, and then do share buybacks. You remember I talked about that a couple months back, share buybacks. And now you've probably heard this term zombie companies. So all these companies now, we have this huge amount of zombie companies where the chances are they will never be able to pay back the debt because their profitability is so low against the high debts. All it's going to take is a very small increase in interest rates, and it's like dominoes. They're all just going to come collapsing right down. When this happens, if you are employed by one of these large companies, chances are you could lose your job. Okay, this is worst case scenario, of course. Chances are you could lose your job. Everything else associated with them, so all the supply chains, will also collapse. This is just an apocalypse waiting to happen with these zombie companies with too much debt. And then what's going to happen with houses? What's going to happen with the REITs, the real estate investment trusts who are in the stock market, when all these values start to come crashing down? What's going to happen to housing prices when they start coming down? And I'll just touch on one point with housing prices, because I'm not going to talk about it in this video. I'll be making a video shortly on the housing market again. But that is the reason the housing prices are still exploding up in value. Sorry, I keep saying value, I mean price. The reason they keep going up in price is because of all the new stimulus. And that's it. So all of this new currency creation that's going into the economy is pushing up house prices. That's all it is. I'm going to talk about this shortly, about what happens when all this catches up with us. This is going to cause a huge crash. And in some places, it's going to come sooner than others. I personally feel, and I've said for a very long time now, as soon as April comes around, if the stamp duty holiday isn't extended in the UK, you're going to have stamp duty coming down with all those other variables I mentioned on previous videos coming down at a time when unemployment is coming down as well. So high unemployment against a backdrop of all these higher prices. It is obvious to me what's going to happen here. Okay, it might not cause a crash straight away because the government can keep putting more stimulus in. See, that's what they're doing to hold off this crash. But what it will do is it will make the house prices come down a little bit, even if it's just by a few percent, 3 or 4%. But this is enough to kickstart a negative cycle. So this is what you need to watch out for. And now let's talk about the lockdowns. And I'm going to focus predominantly on the UK lockdowns because the UK seems to be leading the rest of the world with what happens here seems to spread to other countries at the moment. And I would say the lockdowns here have been the worst anywhere on the planet. They are so strict, so draconian, I've never seen anything like this. And it was funny, I wanted to tell you something that my wife asked me the other day. And she said, how do these lockdowns compare to when you did your basic training in the army? And I thought about it for 5 or 10 seconds. And then I started laughing, because what I realized was basic training in the army was actually nowhere near as bad as what we're going through right now. You might think that sounds a crazy statement, but here's why. Right now, the mental health issues in the UK are through the roof, because people really can't do anything unless you're going to the supermarket or you're going to go for a walk to the park. But even that's being restricted. Before, you could get as much leisure as you want. Now it's very restricted. You're not even allowed to stop, sit on a park bench, or you'll get a fine from the police. So really, all you can do is go to the supermarket, and that's pretty much it. There isn't a lot you can do right now. Whereas when I was in the army doing my basic training, I could do a lot of things. I could go all around the camp. I got as much exercise as I wanted. We had different shops and stores that I could go and buy something if I wanted to. There was nowhere near the restrictions that we have right now. My mental health was excellent. It was just great because I could be with other people. There was a community. There was about 40 of us in our intake, in our platoon. So it was a great experience because I had that camaraderie, those friends around me. Even though I was the youngest, by the way, I was 17 and they were all, in their 20s or whatever. But it was such a great experience to have that. Whereas now, we haven't really got anything. You can't even socialize with anybody. It's so draconian what we're going through. And I think what makes this even worse is a concept called institutionalization. And if you've never heard of this before, I'll give you an example of it. And the army is a great example, or even prison is an even better example. Have you ever heard about certain prisoners who come out of prison, but they don't want to leave prison, and sometimes they reoffend just so they can get back into prison because they don't know anything else on the outside world? They're worried about how they're going to pay for their housing or accommodation or, food, because in prison you get all this taken care of. You don't need to worry about anything. So what happens is people become institutionalized. Even though when they first go into prison, they're scared and they're worried, or, if you're a big tough guy, you might not be, but the average person is scared and they're worried and they've lost all their liberties. But then what tends to happen is you actually get used to it, and that pain you're feeling when you first arrive goes away. So we can, again, relate this to everything going on right now. And this is called institutionalization. So people that were pulling their hair out at the start and they were so stressed out and really upset, a number of people have gotten used to this now and are even saying, these lockdowns are fantastic. I've been speaking to people recently. These lockdowns are great. This is the best thing to do. We need to stop the spread. These are fantastic. Everyone, and you're seeing all this stuff. And I would say a lot of that is due to this concept of institutionalization, combined with, if you look at the people who are saying this, these are not people that are worried about how they're getting their money next month. These are people whose jobs haven't been affected. These are people who aren't worried about their mortgage payment or their rent payment next month. If you speak to people who have lost their jobs or they're worried about these things, they're not saying these things. They're not saying lockdowns are great and fantastic. It tends to be the people who are already okay and fairly secure. But let me tell you a couple of facts right now. And that is that mental health problems are through the roof. They are absolutely through the roof. Suicides are up. Bankruptcies are up. Business collapses are up. Job losses are up. All of these things are going on. The reason you can't see certain things is because of stimulus, or because the government is paying furlough, or it's doing all these other programs right now with money that doesn't actually exist. Although in theory it does exist, but it's just been created by the central bank. But before they created it, that currency didn't actually exist. And this is going to have bad knock-on effects as we go further down the line. I want to move on to the next topic then, and that is business closures, or as I've been calling it in my videos, businesses collapsing. So just this week, I went to a local town nearby, and I was really, really shocked. And I would say that it was probably about 40%, maybe more, of the businesses had collapsed on that high street. 40%. Just put that into perspective for a second. And that 40% is people's livelihoods. It's people's jobs as well. Not just the people who own the businesses, but the people who work in the businesses. This is not good for the economy, because the more business collapses that occur, the more people lose their jobs. And then those people go into this bigger pool of people seeking employment, so that you now have more people competing for less jobs. And this is not good for wages either, because what this encourages is some very unscrupulous employers to start saying, well, there's so many people applying for this position, let's lower the salary of it. And this has occurred in the 2008 crisis, it occurred in previous crises before. So this is another thing to be very careful of. And I think the government probably knows this, which is why they're doing furlough in the UK, paying the majority of people's wages, and they're doing quite good unemployment benefits in the United States, although those benefits have just ended now. So we're going to see the knock-on effect of this mainly in the housing market, in some other markets as we go forward. And even with those businesses that aren't collapsing right now, you'll notice that a lot of them are struggling because they have the same amount of output that they had in 2019, let's just say. But in 2021, the demand is through the floor. So people aren't interested in going out and buying swimwear, a bathing suit, all this sort of stuff that you might buy to go on holiday or go on a vacation or something like that. A suitcase, for example, all these things that you take for granted, which are very simple things, people are not buying them. What about menswear, like suit jackets or shirts and things like that? Do you honestly think anyone is going out and buying these things right now in mass? No, they're not. People are buying pajamas to, sit at home and, sweatpants and stuff like that. So we have this oversupply at a time when we have an under demand. And this is actually deflationary in nature. So eventually this will start to cause quite strong deflation at a time when the government and the central bank wants inflation. So we have these two forces pulling against one another right now. And I'll give you another example. So this is from the UK of how businesses are really shooting themselves in the foot. So my wife and I have an embassy appointment coming up, and we booked a hotel because the appointment's really early in the morning. It's a long drive or train journey, however we're going to go, very early in the morning. So we booked a hotel and we thought that was that, until we get a message from the hotel, an email. And I'm just going to read it out to you because I've got it here. Actually, I printed it out. So they requested 3 separate documents. Number 1 is a letter from our attorney. Number 2 is a letter from the embassy confirming the appointment. Actually, there's 4 documents. Number 3 is the reason why we need to stay there and why we're going for the appointment. And number 4 is a health questionnaire that we must fill in with confirmation that we will download and use the Track and Trace app, which is a government tracing app, before we arrive. Failure to do so will result in your booking being declined. If that wasn't bad enough, wait till you get to the next paragraph. Please be aware that the police check all documentation and visit regularly to ensure all guests are not breaking the law. Any breach in the law can result in prosecution and arrest. We advise you to think very carefully as to whether this booking is a legal requirement and essential. Can you get your head around this? This is a hotel. This is a business, a for-profit business. I don't understand why they're getting involved in trying to enforce what they're calling the law. It's actually government guidance, but we won't even go down there with the different types of law. I don't understand why they're trying to become the police or the government, trying to enforce all these things upon us. So obviously we cancelled the booking. There's no way we're going to stay there. Why would we stay there? With all of these strict rules, we won't even be able to sleep. We'd be expecting the police to come banging on the door, kicking the door in. Show us your documentation. You're going to prison. Well, sorry, what for, officer? For not, I don't know, but I'm going to take you anyway. That's the sort of situation that we're in right now. And yet we stayed at another hotel not many weeks ago. There was the complete opposite experience. In fact, it was a very enjoyable experience. But this was a huge hotel, so 300 rooms, massive parking lot. And yet when we went down for breakfast, it was a tiered time sort of schedule. We only saw 2 other families there. And by the time we'd finished after an hour, another 2 families came. So this shows you what's actually happening with the hotel, the serviced accommodation industry. And even when we stayed, we didn't really see many staff members. I only saw 3. That was the person on the front desk, the housekeeper, and the lady that was serving us in the restaurant downstairs. Obviously, there would have been a chef and some other people, but we didn't really see many people at all. And in fact, when we were going and doing other things, when we were having lunch and things like that, it was always the same person serving us each time. So I think this is a really nice transition into job losses and unemployment right now, because it's pretty obvious what's happening. Hotels and all these other businesses, they are laying off staff at a rapid rate. And I personally don't agree with what's being said on the news or with the government that employment is going to improve and the jobs are going to come back and we're going to have this big recovery. I think it's lies. I can't, from a financial or an economic point of view, I'm just using all the models that exist. And I'm looking at history and I'm correlating those models. It doesn't make any sense. So this is why I'm saying a lot of this is propaganda. It's not truth, because it simply doesn't make sense that employment would improve whilst businesses are collapsing. Where are these new jobs going to come from? I can't see where they would come from. And of course, when people can't pay their bills because they haven't got a job, how are they going to pay their mortgage? How are they going to pay their rent? How are they going to buy food, come to think of it? How are they going to do any of these other things? See, the government is giving stimulus to people. So let's use the US for the example. So the government gave the stimulus check, and then there's another small, $600 stimulus check, which isn't really going to go very far at all. The purpose of this, and this is very interesting, is to create an increase in the velocity of money. But what happened was, and you'll check this out if you don't believe me, the first one was a check. So what people did with it was they put it into Robinhood and crypto and all this sort of thing. Not everyone, but a number of people did this, right? So the second time around, what happened was the government didn't just give checks. This time they gave preloaded debit cards. Very interesting. Why did they do that? Because they didn't want people to go out and buy stocks and shares and cryptocurrencies and things like that, or precious metals. They wanted people to actually take this card and spend it in the economy, because this increases the velocity of money. So if you don't know what the velocity of money is, I'll just explain briefly. Let's say again that you have that $1,000 or pounds that we gave the example of, and you go out and you spend that in the economy. Well, when you spend it, someone else receives it, and there's a transaction there that the government can tax. So that's a 1 in terms of velocity. When that person then takes the money and they spend it, there's another transaction, so another tax. The government receives tax revenue. Now the velocity is 2. And they want this to keep going around and round and round because it increases the velocity of money. It helps to pay taxes to the government, things like that. When you take that check and you buy cryptocurrency, for example, with it, or something else, let's say instead you use it to pay off debt, what this does is it creates deflation, not inflation, which is what they want. It creates deflation because you've just destroyed some of the currency or some of the money that already exists in the economy by paying off debt. And they don't want that. But just to tell you what my biggest concern is with the stimulus, all of this new currency printing or creation, because they're not printing, but all this new currency creation, my biggest concern is what happens 12 months or sometimes 18 months later on, is that the inflation kicks in. So all this currency that's gone into the top levels and filters its way down, it ends up in food prices. It ends up in other prices, the CPI, the Consumer Price Index. This is where it all goes. So if you add, let's say 25% to your currency supply, you're gonna get an increase here in the price of goods and services. And this is a problem for you because this is gonna exist against a decrease in wages as time goes by. So it's pretty obvious what's going to happen. Your standard of living is going to reduce against the backdrop of these problems. The other thing that really concerns me with all this stimulus going in is that if you look at who owns the bulk of mortgages now, especially in the United States, it's the Federal Reserve. And the reason this has occurred is because they, again, check this out. The Federal Reserve so they are the starting point. They're the ones that create currency. So they're the start of the monetary supply. They create the currency. They then do swaps with, treasuries or whatever else. So what happens, let's use the banks as an example, commercial banks. So the Federal Reserve will do a swap with the commercial bank. So the commercial bank then gets a new credit line and the Federal Reserve gets the bad debts. But of course, they don't want most of these bad debts. What they want is the MBS, mortgage-backed securities. So who owns the most mortgages in the United States now? It's the Federal Reserve, an institution which is neither federal nor a reserve. It's a private institution owned by shareholders. So this is a thing that really concerns me right now, because this plays in to a lot of the more controversial videos that I have made and the Great Reset and some of these other things. So this is one of my biggest concerns at the moment as to why exactly this is going on and why it's being permitted. Now let's just talk about the phenomenon that is stagflation or slumpflation, which is something you probably hearing about for the first time today on this video. But stagflation really hasn't been seen since the 70s. So you remember back in April 2020, I received ridiculous heat and criticism for saying we were going to have stagflation at the end of 2020. And of course, what happened is we've had stagflation at the end of 2020, which is why I'm now making the next one, which is just as bad, which is about slumpflation. So I've got a couple of notes here. And I personally think that we're probably going to go into this in 2022. I don't think it's going to occur this year in 2021. But let me just explain what this is. So slumpflation is a situation in which economic depression is combined with increasing inflation. So the reason I'm saying I think this may occur in 2022 is because it ties in with the stimulus that was printed in 2019, so March, and then we had another one at the end of the year just now. All of this is going to come 12 to 18 months later. So that could be as early as April of 2021, when we start to see the inflation coming in. This will be against a backdrop of deflation at the same time. It's going to be a very, very weird period to see these two things going on at the same time. And another statement I wrote down for you is this: inflation is a monetary phenomenon. It's the result of too much money in the monetary supply versus the output of production. And make no mistake about it, inflation is created at one place and one place only, and that is the central bank. They create the inflation, and the government support it. You may think, why would the government support this? The reason the government supports it is because it's good for government debt. The only way you can ever stop inflation is if government stop going into a deficit. So it's the government debt that causes the central banks to create more currency, and this is how you get this inflation. But again, make no mistake about it, inflation is theft. The government love it because it brings down their debts, right? So if you've got $1 million in debt and then the central bank creates another 20% of currency, well, that's just reduce your debt. But the people it steals from is the savers. So people who save money in the bank, they're the ones that are getting robbed by this. And already you've seen the amount that the US dollar has lost this year already. The purchasing power has reduced significantly. And this is going to continue. The inflation hasn't even hit yet from all of that new stimulus that went into the economy. Hasn't hit. This is why I say you're taking a double risk with leaving your money in the bank right now, because it is going to come down in value because of all the new stimulus, and the banks at some point are going to have a crisis. And that's why I always say that once the money comes into the bank, I spend it. So I don't, waste it when I say I spend it, but I invest it. I buy precious metals. I'm now buying cryptocurrency with it. These things, I believe, and I may be wrong, but I believe that they will continue to go up in value or price, whatever you want to say, against the backdrop of the US dollar or the euro or the British pound or whatever coming down in value against it. And another thing that was quite startling to me, and I think it's going to be shocking to you as well, this is a Reuters article that came out yesterday. And it says World Food Price Index rose for 7th consecutive month in December. The index is up 6.6% on last year. This is very concerning because this means that food prices are coming up a lot faster than even I anticipated. So just make sure that you have plenty of stored food. Don't just, have no food and rely on going to the grocery store every couple of days for your food. Make sure you have some long life food just in case there are any issues going forward. So thank you so much for listening to my warnings this month. Just a reminder, if you want to join our community to learn a lot of this stuff that I'm talking about, the link is in the description below. Please come along and join us. Even if you join on just the lowest level, you will get access to the community where all of those threads and a lot of people are discussing these topics as well. I think you'll really benefit from it. So thank you so much for watching the video today. Please remember to click like if you haven't already, and why not subscribe to the channel. See you next time. Take care. God bless.